Hey, how's everybody doing? Listen, excellent news. My friend closed on his property. If you recall, like around a month ago, I did a video for him that I was actually acting as a liaison for him to purchase a property out here in Cleveland. That's the property, and they closed on it. So he's using me to do the rehab for it, and that's what we're going to do. We're going to do the rehab, get it rented out for him so he can make a really nice return on investment on the property. We're going to figure out market cap for him, do all the things that need to be done in order to be a prudent real estate investor, because you have to know these numbers. You have to know what the market cap is for your property, especially if you're going to get rents from those properties, as well as what your return on investment hopefully will be when it comes time to sell. So that's what today's video is about. We're going to go over those numbers for him. I'm going to keep you up to speed, up to date on everything we do with his project as well as my own project. As a matter of fact, I'm here at my project right now. Let's take a look at it. Yeah, that's it right there. And, we're doing big things out here in Cleveland, and we're going to continue to grow, do what needs to be done, do it right, and keep it moving. All right, let's get into what today's video is about. But before we do, just like to let you guys know that we are being sponsored. That's right, we're being sponsored today by Kind Capital Resources. They are a financial firm that provides monetary financial planning for entrepreneurs and their companies. So if you need any type of corporate structuring, capital raises, even insurance, Kind Capital Resources is the firm for you. I am going to put their link down in the description below. Make sure you get in contact with them. If you are a small business owner and you are looking for some capital as well as corporate structuring, be it white paper, business plan creation, raising money through a Reg D 505, 506 private placement, any of that, make sure you get in contact with Kind Capital Resources. Again, their link is in the description below. So when we're talking about market cap, what actually are we speaking about? Really, it's very simple. If you were to put $100,000, let's say, into a bank account, and you got 1%, which is very good. As a matter of fact, as probably everybody knows, you get 1% on that money per year, you're only going to make $1,000 for that year. If you put your money into, mutual funds or government bonds or anything like that, you know what your return on investment is going to be because you know what the interest rate is. And that's what market cap, or the cap rate with real estate, is. It's just basically what is your interest rate on the return on your invested amount of capital in that property on a yearly or annual basis. So, for instance, my friend, he got in contact with me. He said, hey, Cal, I want a property where it is 11 cap, between an 11 and 13 cap, and I'm looking to put $100,000 into it. So basically, he's telling me that he's looking to purchase a property total, all in, $100,000, and he wants between 11 and 13% on his money per year after taxes. So he wants to pocket between $11,000 and $13,000 per year on $100,000. Pretty simple, right? That's what it is. But if the funny thing is, if you ask a lot of real estate investors, especially landlords or people who collect rent, what their cap rate is for their properties or what the market cap for their properties is, they don't know. They have no idea. They just know that they get a monthly income from rents. They have to do a certain amount of maintenance, pay their mortgage on it, taxes, all that type of stuff, all their expenses, and that's all they know. But it's deeper than that. So whenever anybody is looking to invest in a property, you should know what the market cap is, especially if you're looking to receive rents and be a landlord. But let's go to my worksheets just so I can show you exactly what it is that I'm talking about. So here is a market cap or cap rate worksheet that I, deal with. As you can see, I added a little bit of disclaimer information The following is for informational purposes only and should not be considered financial advice. Consult with your financial consultant, accountant, and or attorney before deciding on any financial situation where your money may be at risk. So as you can see, nice little disclaimer. But anyway, back to the worksheet. So, again, you have the profit for the company or your property, and it'll show your rent collection per year, plus any other items where you might be making income from, like your laundry or your parking, if you choose to charge your tenants for that. And then you have your gross profit. Then you have your operating expenses, all extremely self-explanatory. You have your mortgage, real estate taxes, maintenance, insurance, utilities, vacancy, which is 7% of the rent. So whatever rent you are getting, you should have that vacancy number in your performer or in your financial projections. You have your management company, which a lot of times will equal 7% of the rent as well. And then you have others, your legal for your attorneys, exterminators, landscapers, etc. That'll go on that line. Total operating expenses, what you do now for your net operating income is you take your gross profit, you subtract your operating expenses, and you get a number. Then you have to take out federal taxes. Now, there's a lot of different ways to deal with taxes, but for this example, we'll say that my guy that I'm acting as the liaison for and that I purchased the property for, let's just say his taxes are 28%, for his business taxes. You take 28% of that number, and then you get your net operating total. Then we'll figure out market cap. Again, very self-explanatory. You have your net operating income there. You divide it by your appraised research value, or your appraised value or your researched value of the property. You'll get a decimal. Multiply it by 100 to get a percentage. Whew, I know that was a lot. But let's add his numbers so you can see exactly what it is I'm talking about. Okay, so here are his numbers. When we look at his rent collection, he's going to be charging basically $1,000 per month per unit. And there's two units. So $2,000 a month times 12, you have $24,000 in rent collection. If he chooses to put it in laundry, and he could make anywhere between maybe $30 to $40 a month on laundry, multiply that by 12. We're just going to be conservative and say he can make $380 for laundry. His gross profit will be $24,380. There we go. Make it nice and crisp so you guys can see it. Go to his operating expenses. Now, he does not have a mortgage. He's doing everything cash. So there's a zero, obviously, value there. His real estate taxes are extremely inexpensive based on the property that he's purchasing, coming in at $976. Maintenance, $250, because basically everything is brand spanking new, so he's not going to have that much maintenance. Insurance, $2,500, a little bit expensive. It's because he's an investor, a real estate investor. And so investor's insurance for a property is a little bit more expensive than your regular homeowner's policy. We have utilities of $650. Again, very inexpensive just due to the fact he's not living there. So all he's basically paying for is the common electric and the common water. So if the electric's maybe $15 a month for the common areas, and the plumbing, or not the plumbing, but the water and sewer bill might be a little bit more expensive, like maybe $35 a month, that's where we come up with the utilities of $650 a month. Again, vacancy 7% of the rent, which will equal $1,680. Even if he doesn't have any vacancies, he can have everything rented out for the complete year, 2 years, 3 years. He can have long-term tenants. You still add the vacancy line there for tax purposes, as well as finding out what your cap rate is. And then maintenance company, if he chooses to use a maintenance company. It'll probably be like around 7% of the rent as well. So another $1,680. Landscapers, exterminators, legal, we can guesstimate that to be $850. Total operating expenses, $8,586 right there. Now, let's go figure out our net operating income. Again, we take the gross profit, $24,380. We subtract our operating expenses, $85.86, and we get that number right there, $15,794. Now, in order to figure out the federal taxes, we take 28% of that number, which is $4,422, subtract it, and we have net operating income of $11,372. Now that we know that my investors' cap rate, or net operating income is basically $11,372, you can say, well, hey, Cal, he invested $100,000 into the property, or somewhere close to that. He's receiving $11,372 a year after taxes, so his return on investment should be 11.372%, correct? Yes, that's basically right. And, if you're doing the numbers off the top of your head very quickly, you can basically say that, but it gets a little bit more deeper than that, especially when we talk about cap rate, because that's his cap rate. What would your cap rate be? Let's just say, if you had a mortgage on the property, or you were going through tenants every 3 months, so your vacancy rate might be higher. So the cap rate can be very subjective. But let's go over those numbers just so you can see what it is I'm exactly talking about. So again, my investor is making $11,372 a year off of a $100,000 investment. And in order to find out the cap rate, $11,372 divided by what the market value of the property will be once it is completed and the rehab is finished. We are thinking the property will be worth $175,000. You divide that number into 175,000, you get 0.065, which is obviously a decimal. You multiply it by 100 in order to get a percent, and the market cap for the property is coming in at 6.5%. But that is if you purchase the property for $175,000 cash. Okay, those numbers will change, obviously, if you have, 1, a mortgage, or 2, you negotiate it for a lesser price. The lesser the price you negotiate a property for, the higher your market cap will be. What do I mean by that? Let's see. The owner's market cap, okay, $11,372, what he is making a year, net operating income, you divide it by what he paid for the property, which is, or invested into the property, which is $97,500. You divide that into that, you get 0.117, change that decimal into a percent by multiply it by 100, and you get 11.7%. Exactly what he wanted. Hey, Cal, I want to invest $100,000. I want between 11 and 13% market cap. Can you get it done? Yes, we can. And that is what all investors should do before you purchase a property. Understand what your cap rate is, what you want to have a return on interest, basically an interest rate, what's coming back to you on a yearly basis before you purchase the property. So don't fall in love with properties. Hey, it's in a great neighborhood, location, excellent tenants, That's great if you want a 3.5 to 5% cap rate. meaning that's what you're going to be getting on your capital, on your money. If you want something higher, you have to go into maybe neighborhoods where the properties are a little lesser, less in value, but the rents are still high, so you can get that higher cap rate. And tell you the truth, there are areas where you could get cap rates up to 18, 25%. But those areas, if you're starting to understand the lingo, they are woo. Those are those type of areas. And not everybody wants to be, basically a slumlord. But don't get me wrong. You could get a market cap, you could get a cap rate with an 18, 25% cap rate and not be a slumlord. You definitely can. But you have to look for those diamonds in the rough, and they are definitely out there. So basically, that's it for today's video. Hope you enjoyed it. Hopefully you learned something, and we will be back with not only videos of my project, but his project as well. So have a great day, and I will talk to you guys later. Best3.com. 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 Oh, Best3.com.